It's been a while, and I decided to show you guys what I was just up to the last 7 days. And you can see this. This is basically a cave in Iceland that my wife and I walked over the rocks to the water to get to the waterfall. It was pretty awesome.
I got it, yeah.
About a minute, 30 seconds long.
Still going.
So I recommend taking a trip out to
These shoes are
Iceland.
great on the water. On rocks.
But make sure that you find it out because locations can be difficult. Yes. Do your research, but it's really cool. Fast forward just a little bit. And basically walk right up to it.
Yeah.
So it was a lot of fun. Maybe the kind of thing that you see in Iceland. So yeah, definitely had a blast there. And there's the Alright, so what about the charts? What happened when I was gone? Well, a little bit of drama actually. Some traders are in some drawdown. As you can see here, one of my accounts that you're looking at right now is in drawdown. Now this is the MaverickFX, and we're just to hit the date change, so the spreads are going to be really high. As you can see, it's over 6 pips here. So the drawdown is going to display more than it actually is. A lot of weird action that's been going on since I've been gone, and so that's why I'm going to take a little bit of extra time today, at least about 30 minutes, to go over what's been happening, and also some the big secret, the one that everybody seems to have missed in my videos for some reason, where I've mentioned it not once, twice. I think I mentioned it 3 times in my past video series. Basically this tip or this idea that really helps me close out my trades a lot earlier. A lot of you are finding yourselves holding on to baskets for extreme amounts of time, and it's causing higher drawdown on your accounts. Now this kind of goes without saying, because a lot of you are following my strategy through just the videos that I'm doing, and it's hard to really understand how somebody thinks just by watching what they're doing, instead of having them basically teach you one-on-one exactly what you're doing. There's some things that you could be missing, and there are some things that you don't go over every single video. Like, for example, Steve Pat at Forex Factory has said that I want to know a little bit more about your thinking on the charts and what makes you take the trades that you do. Most people know the trigger candle, which is the inside candle that I typically will follow to enter my trades, but a lot of times it's kind of hard to figure out which ones to pick, or which ones that I really do pick, because there's inside candle setups that happen all over the place. Now typically we've used the RMI indicator to show us where there are overbought or oversold places in the market. But there are some issues with that, and I'm going to get into that now. There's also, you're looking at a support resistance indicator right now. I'm going to actually take it off the chart temporarily. Now, so what we typically are looking at, actually before I get into that, I'm going to show you, give you an update on my accounts. So we'll come back to what have we used in the past and what I may use in the future in modification of the strategy and EA. So drawdown on the account is looking at about just over 15% on the LMFX account. And look at my personal account at Trader's Way. You see that it shows $21,703 with only 2 trades in. And my account profit or total profit this week, let's see, custom period. So I left on my vacation on the 13th, right? And I was back on the 20th. So I'm just going to go from the 13th to the 21st to see how much profit that I've actually made on this account. You'll see that I've actually had a closed profit of $1,061. Now, why is there such a big difference between this account and my LMFX account? Because I've been in this trade at LMFX, I think, since the 15th. and you can see that the first trades, yeah, were entered on the 15th. So I've been on this for in this trade for about 5 days now. I mean, that's including the weekend as well, but still, it's been a lot longer basket than I'm typically used to. So I'm going to get into the difference of trades there. But before I do that, here is my buddy Robert's account. Now you've seen this account before. You see that it's $138,000 that's showing right now, and then we're in a drawdown of $10,000. I know that seems like a lot, and I have my times of worry on this account, especially during my vacation when this account was or when this trade was getting a little bit was going south, and it was a bit frustrating at the same time. Because I was on my vacation trying to have a good time, and this was happening. It's just really bad timing, and it may stop me from actually taking, using my expert advisor when I'm on vacation, just in case something like this happens again. I mean, it's very rare for me to actually have a drawdown of this size, but it just happened to fall during that period. Okay, so I'm going to go over these positions. This is the first position that was taken. Let's see if I can get the auto scrolling off. This is on my BPS, by the way, so it's a little bit hard to do all the scrolling because it's a little bit delayed. Okay, so there's a couple of positions. There's this one actually. These three actually ended up taking profit. So there was an inside candle set up there. And then these three ended up taking profit down here. So those ones were already done, and those took profit on the 14th. So what about this one here? And I'm going to zoom in on this a little bit closer so you guys can see it. Now that doesn't seem like a trade now, does it? Because it's typically I want to wait for a break of this high, or at least a test of it, before entering again. So this is not a standard setup for me, and not something I would take on if I was trading the system manually. I would wait for this level, this previous level, to actually be broken before entering any position. So this would not be a setup for me. The expert advisor, took this setup. Why? Because it's basing it off of the filter of the RMI system, and the RMI is completely overbought because the pullback here was almost non-existent. It was barely enough for these three positions back here, 1, 2, and 3, to actually take profit down here. But because it only went down slightly and continued up, the RMI didn't have much of a pullback into the lower levels before shooting back up, causing it to enter a trade here. That's not the first time that's happened. I've actually seen that happen a few times now, and it's gotten me a little bit concerned, especially after this drawdown showing that this is happening. So this first trade was the problem, caused us to enter at not a good place in the market. Now, where would I typically enter? Well, I would be looking for a first entry right here with this inside candle setup. There was looks like that was the main one, at least at Oanda. So what happened on my personal account was that trade never existed. My expert advisor never took the setup. This was what it was right here, inside candle setup, and there was a slight change in price difference of brokers. And so my expert advisor did not enter a trade there. It actually entered one up at this inside candle. Took the best positioning. This was not quite an inside candle setup, at least I don't think it was. And so I took the next one after that, in which gave me a really good positioning on that actual pullback that happened. So the correct position was taken. I mean, this would have even been good if this was an inside candle setup as well. Both would have come out with profit. So that's the more extreme place in the market. That's what I'm looking for. I'm looking for the recent swing levels to be broken, or at least retested. A lot of times just barely push above, and then a pullback will happen. Here was a strong push, and there was no inside candle set up, at least until this point. and that's where my expert advisor entered at Trader's Way. Not to say that Trader's Way is a better broker than Oanda. I just had a slightly different price, which caused my expert advisor to take different positions. And this one was not a good trade setup as for the reasoning that I just mentioned. And I'll get more into that in just a second. Okay, so the next positions that I took a few days later, as you can see, I had more profit, was, looks like I'm missing a trade. Let me see if I can find it. Okay, so I had another position, and this one was a problem. Now this one was taken in the same kind of situation, where the RMI was definitely overbought, oversold. And let me see if I can get that up. Doesn't look like I have the RMI installed on this on my Trader's Way account. So let me open it up on the this account actually didn't take the trade because the current basket that it's in. So this trade was never taken, or this basket of trades was never taken on the MaverickFX account. So I'm not going to get out my RMI indicator, but you'll understand that it was above the 70 level at this point. And it took another problematic position. Because why is this bad positioning or bad entry on a short position? Because it could potentially go down from there, right? But yeah, it could, but I'm looking for this last swing level to be broken before entering any more trades. So what does that mean? That means that this is a bad first entry, and my first actual entry would be right in here. You can see the inside candle set up there. This is a much better entry. Why? Because it broke the last swing high, or at least hit that swing high, barely breaking it or meeting it pretty closely, and then inside candle set up. So I want it to be either just barely broken or a double top in this case, and an inside candle right near that level. And that would have been my first entry. So you can see that I would have been in much better positioning if my first trade would have been entered right there. It would have been just 3 trades instead of 4 in this case. Looks like it could have been even less. Let's see what it was. Entry point 45 pips. Would have been 20, 40. Yeah, it would have been either 2 or 3 positions on that trade. So much better, less risk. And currently I'm in some positions right now, so let me show you those. Okay, so the positions, I had some others that closed out earlier today. So you can see the more positions that were closed out. This one was right before the news came out, and I was okay taking news positions here with the FOMC because the pound and the CAD are not directly affected by something like that. And you can see where the inside candle was on that. Again, another okay setup on this one. This one was okay because there was definite resistance at that point. Now I'm just using some standard price, behavior where this level is obviously a resistance point up here, right? And it's been hit 1, 2, and then 3 up here. And it did break and there was a nice close from the candle above that with the news candle, that FOMC news candle. But then it pulled back down after that, after an actual inside candle setup right after that. And it has been pushing down ever since. So I was able to get a decent entry on that, although I would have much rather liked this to enter another position after this nice swing level here. So I would have liked to enter first trade of this after this inside candle setup. But you can see the EA again taking a lower position, which is not the best option. I do like how it entered its position. You can see that there was some slippage in the actual execution, and I did get a nice entry right at the top 60 pips later. So typically, you guys, I look for 20 pips on my grid, and because of how the market was behaving at this point, and there was a lot of action going on, I did end up getting right at the very top of that, and then coming back down and then taking a decent profit. Now the profit was actually larger as well. I took about 60 or so pips on that, and have been happy with it. So a really good profit this week on this account. And if I do all history, you'll see that since I've opened this account, which was on the 7th of, well, that was actually a while ago, but since I made my most recent deposits on the 4th of this month, so it's only about 15 days now, I've actually made over $4,000 on this account. So it's been really positive. I've actually just made a $2,000 withdrawal. I'm waiting for them to actually execute that. All right, so let's get into the stuff that you guys are really wanting to know, which is the big tip. This is the thing that you're probably watching the video for the guys and gals that are actually trading my system. And now again, this was mentioned in previous videos. So let me go to my MaverickFX account. And the tools that you guys have are the inside candle setups and the RMI. And typically a lot of you guys are going off of 30 and 70. But I actually changed that setting, and I have mentioned it in my videos for each pair. And it's not always the 70 and 30 level for each of my pairs, the pound CAD, the AUD CAD, and the Euro pound. I use the 65 and 35 for the pound CAD, and I use the 70 and 30 for the Euro pound, and I use the 25 and the 85 with the AUD CAD. And those just showed really good test results in history. And something a little bit more reliable than the standard 70-30. So that's one thing, and I'm saying this to help those traders that are actually using my system and are potentially in drawdown right now or are struggling. I don't like to see people lose money that are trying to trade what I'm showing. Again, this is not something a video series to have you become profitable, or a instructional video from rags to riches type of thing. I'm not trying to teach you how to trade here, and so it's not necessarily my responsibility to tell you these tips. But I feel bad and don't want to see people lose. And I saw some users losing a little bit of faith in grid trading. And so this next step is huge and detrimental to the system and grid trading in general. So I'm gathering that when I say this, a lot of people are going to take this information and run with it in a big way, because once they see it, I think that they'll use it not just in my system but potentially in others, which is good. All right, so again, this is old news, but here we go. Let me show you. Let's see if I can show you an example from the Euro pound. Okay, so I showed you guys this picture on the thread back about a week ago or so, where some of you are stuck in this massive push down on the Euro pound, right? And it just keeps moving down and down and down, right? There was this pullback here, which is pretty substantial, but you can see that, yeah, I'm in 3 positions right now, and they were in profit at one point, and this is currently going down. But the bigger problem right now is not the Euro pound, it's actually the pound Canadian dollar. I have a lot more positions on that pair. And so this was being used as a hedge. So why didn't I close these out when all 3 positions, 1, 2, and 3, were all in profit? All of them were profit at the peak. Well, it's because I was using it as a hedge. And how I do this is I actually trade all those 3 pairs that you're seeing, and I look for a specific dollar amount of profit. So when that dollar amount, let's say $200, is met, every single trade closes out. It doesn't matter if a trade that just went in on the Euro pound or the pound Canadian dollar just went in seconds before that. When that actual amount in profit is met in dollar amount, you can also do percentage, then all my trades close out and I look for the next opportunity. This has caused me to close out positions much earlier than I would otherwise. And that's what has caused me not to be involved in this huge push down on the euro pound, because I'm closing out some trades in small profit. This was like 10 pips. This was actually in loss because the trades on the pound Canadian dollar at the time actually closed out in much larger profit. I think that was around in this time, where I had $21 profit on that pair and a $9 loss on this one, coming out with an overall profit. So like I'm saying, that a dollar amount profit amongst all three of my pairs is the big key to this, to trading like this. Now I know that a lot of people are still going to be turned off from grid trading, but this causes, because we're still prone to having some issues, and that's the issues that I'm trying to correct at the moment right now, where some trades are entering not at the correct zones. It's because I'm using an expert advisor, but if I was trading this manually, it would be a much different scenario. So you can see that on this account that trades were entered, the first trade was entered here. And I talked about this position already, that was not a good trade. I want, when the market pushes up, makes a new high, and it makes a further new high, and then it does a pullback, I want it to jump back up past this level, or at least meet it, and then go in on another inside candle setup with the potential for it to go down. Now you'll find that a lot of times when price, or on a specific pair, or just in the market in general, when it makes a new high, it will a lot of times pull back. So for example, new high was met here, right? Small pullback. All right, so we had that new high. That new high was broken here, right, with a nice bullish candle. Then it pushed up slightly and then came back down. And that's typically one of the best setups for me, is when the previous high was just barely broken, and a lot of times there'll be a small pullback after that, and a lot of times that's why we get an inside candle setup. So that's how I read price, is I'm looking for new highs. And the problem with this position was not just where it was placed or where it was entered. That's one thing, but look at the retracement or the positioning of it. So if you're looking at price and you're counting the pips from the bottom of this move, so the bottom of the pullback on the short side, to the next entry, you'll see that it was only 47 pips from that move. Let me zoom in even further. So what I'm doing is I'm looking for the pullback from this point to this point. And then I am seeing where the inside candle setup, which is right here, this is inside candle setup, how many pips are from that bottom to the top position. And since I zoomed in, it's about 50 pips. I want it to be a much larger amount of pips in between, because I want there to be more of an extreme in price before taking any kind of trades. Like I've said before, the longer something moves in one direction, the more prone it is to have a pullback. And if we're only waiting 50 pips from this point to this point, and then for the price to continue on the downside, after just moving 50 pips, that's just not enough price movement in order for me to take a trade. Now, since I was out of town, obviously I was probably doing like what I just showed you in the video, and doing tourism while this trade was entered. Now, it's possible I would have left it in thinking, oh, well, typically this doesn't happen too often, and a lot of times I'm pretty safe. But I'm seeing this kind of scenario happening quite a bit now. It happened right here where a trade was entered, and then it happened on my Trader's Way account later on, and here as well. And I don't want to see that happening so many times. So I'm actually looking at potentially removing the RMI indicator because it's a little bit affected by a very strong trend where it has a bit of a bias on that, not showing us a good place for inside candle setups. Now that could be a simple fix by trying to find or saying that I want there to be more pips from trades, but that can get a little complicated. So I'm looking just at a better indicator that shows a more accurate levels and breaks of levels. So that is, let's see if I can find it. So that's Pivots Daily version 1. Now, this is a pretty cool indicator. I've used it in previous EAs, and it's shown a lot of potential. Now, what it does is it just shows the full day, so from here to here, what the support resistance levels are. And you know, it's not the most accurate indicator for pinpointing exactly where the pivot level is and where the support, the best is support 1 and support 2 levels are, but it does a decent job in showing where overall price activity is. And I'll show you for as many days as you like. And what I'm looking for is something that can get us, that stops us from entering on those, those trades, those inside candles setups that were no good, like this one here. Now, typically, I would want their price to push up and make a new high. And so I want this level over here to be broken, like I mentioned before. And you can see here that this level, there's a red line right here, showing a resistance, so an R1. And I want price to at least go to that point before entering any inside candle setups. And you can see that it pushed up, and then we got the first inside candle setup here. So that's when I would be taking the first, so trade 1 would be entered up there, instead of all the way down here, where we didn't want this entry. So that is a total of about 245 pips difference. Much more extreme price, right? And so that is something like this is what I'm looking at on replacing the RMI, so we get more extremes in the market, which I've mentioned already. So let's look at the next issue area. Well, this is where my other inside candle setup mess up with EA took, and you can see that this would not be a position because price needs to hit a support or resistance level. This is the first resistance level, and price didn't hit that level. It didn't even hit it on this inside candle setup here. So this would not be a position either. But this one would be. This would be because it broke the support level, inside candle, in an entry. Okay. So next support level is inside candle setup. So this is the pivot line. So no trades will be taken around the pivot line, although there can be some action around it. And again, I'm not going to say that this indicator is like gold or anything. Like these levels, price isn't always going to just bounce right off of them, but they do help my expert advisor read something to help it understand and know where price is potentially going, or may reverse or have volatility around. And so here we have today, where price has been bouncing around all over the place and ranging in this upper area, and you can see the inside candle setup here that I would have taken because price did push up, it broke the level, and inside candle setup there, and this would have been a nice trade and would have been profit. So I'm still trying to debate since I just got back. And I was sitting down one day and wasn't even in looking at my charts. And I came up with this idea. I need something better to show me the extremes in the market price, that the RMI is just not quite cutting it to show me that, because it can be a little biased on those trends. It's a very helpful indicator, but I need something that is a bit more accurate for the EA to read. Now, this is something that those traders that are trading manually can also follow as well. But there are times that you're going to still have some problems. And I'm going to show you a couple more instances. So you see that my setup here, this is the big, huge trade that I had in massive profit that caused my account to look like this. This big gap right here. So that was the big trade. Yeah, it was a good position. I held on to my trades because I felt like it was best to do so in this scenario. And you can see here that the pivot line was hit, but no support resistance or no resistance areas, resistance 1, 2, and 3, were not hit. So I wouldn't have entered this first trade wouldn't have been entered The second one would not have been entered as well, but this would have been our first. This would have been our first setup. This would have been an inside candle setup here. So instead of having 1, 2, 3, 4, 5, 6, 7, 8 trades, we would have cut out those first two, and actually this one too. So this one would have been exited. We would have had 1, 2, and 3 trades, and then probably 4 and 5. So there would have been a substantial amount of trades been cut out, and we would have been entered at a much better extreme level in the market. Okay, but you know, sometimes there will be instances where we will still come across a bad trade. And let me show you where that is. I actually have to change the indicator. This will be the last thing I cover in today's video, and then I think I'll end this and post it. So let me do 100 days. So you can change the amount of days that you want to do or see in back history. I'm trying to find for you guys places that we can't really always control. So for example, here is a pretty big drawdown here. Look at how many trades. Now, sorry for all the sell positions over here. Just try to ignore those. What we're looking at are the entries here. I'm sorry I don't have a clean chart right now because of all the sell orders in. So what I'm looking at are all those positions. You can see that they all closed at profit here, right? Well, this would have not been a setup because it didn't reach the support level, the resistance level up there. So there would be no trade there. But we would have had an entry here. That would have been the first entry. So honestly, that we would have cut out at least 2 of the first levels, and that would have still helped the drawdown on this trade. But honestly, we would have still had a high amount of trades on this basket and would have been in a good amount of drawdown, but still would have been a much better entry. And it will be my choice. How extreme do I want the price to be? And I'm going to set this in my settings. Where do I want price to hit resistance level 1? Do I want it to hit resistance level 2? And if I want it to hit resistance level 2, then this whole area wouldn't have been picked to begin with. But I want those options in my expert advisor just in case I want a little bit more flexibility. So let me see if I can find the place I wanted to talk about before I end this video. Sorry for taking some time. I think it's a little bit back. Okay, here it is. So this is the place I wanted to show you guys that either way, I would have had multiple trades in this setup, no matter if I was using this indicator or if I was using the RMI indicator. So you can see here that if we're looking for resistance level 1, there was an inside candle setup, and you can see the first trade was entered there. And then 2, 3, 4, 5, 6, and I ended up entering a lot of trades in this basket. And no matter what setup I had, I would have had the same amount of trades in this basket. Yes, they all did close out, and it was a higher drawdown of about 200 pips or so. But it did recover. It was 190. Did recover, and I was able to close out trades. Now, also at this time, with the big tip that I told you guys, I also had trades in on the euro pound. Now, typically, since the pound Canadian dollar and the euro pound are counter-correlated, when the price started going back into my favor and my trades started going hitting less drawdown and eventually hit profit, I ended up taking profit earlier than expected because I also had trades in on the euro pound that were going in my favor at the same time. And as I said before, I closed all my trades out at a specific dollar amount. And amongst all pairs. All right, so I think that's the last thing I wanted to talk to you or mention to you guys in the video. The support resistance is still a work in progress. It's something that I'm going to be exploring a little bit more over the coming days. I'm probably going to have my expert advisor modified so it can take these more extreme levels. Now, it's going to be interesting to see how that does in testing and back testing. Back testing I can only do so much with because my system can't be back tested now because all trades are working together, all pairs are working together. That I can't backtest my system anymore. When all trades from every pair, or my 3 pairs, are closing out at a specific amount of profit, means that I can't, I don't know what's going to happen. And I try to make these adjustments as I see the drawdown from potential problems, like I showed you with my expert advisor, and seeing that trades could be taken in much better positions in the market, that I need to make those adjustments. So we'll see how these go. I'll keep you guys posted on what I find out on backtesting as well in future videos. But we've been going on for a while now. It's about 35 minutes. And I'll maybe do another video tomorrow or Friday. We'll just see once this basket closes out. Now you guys may be wondering, how am I going to handle this basket before I go here? What's my next step? Why am I still holding? Well, I'm still holding because of the support, the resistance level up at this top, and there seems to be a good amount of resistance holding up here. I do feel like at this point we're going to be shooting down on the pound Canadian dollar. A lot of people may find me to be a very biased in that, because I have high hopes that this will move down, but it is part of my strategy that when the pair, the pound Canadian dollar in particular, pushes up in such a big way like this without much of a pullback. So this would be pullback 1, or wait, yeah, pullback 1 after the entry here. So this is the first pullback, and this is the second pullback. And if you count in pips the amount of movement from the first pullback is only 100 pips, and the second pullback also only about 100 pips, 120 pips. Typically, when a price moves up from this bottom area, actually it's been a lot more than that. Yeah, this was a more substantial pullback here. Let me see if I can show you this. The reason why I'm counting price from up here, or technically from down here, is because this was a more substantial pullback, one that I'm more used to, or that is more in the personality or the previous personality, and that's why I'm going to say previous, because things are always, personality of currency pairs are always changing, but previous personality would show that this is a more standard pullback from here to here, which is 200 pips. And so the pullbacks that we've had up here are not substantial enough to really count as a major pullback, and so I'm still expecting more of a major pullback in the current market and where it is. So from the bottom all the way to the top, we're looking at about 687 pips, and then from here to here it's still 632, and from our entry we're looking at about a 390 pips movement. Now typically I have a stop loss on my trades at about 500 pips, and you can see those are actually still in place, and so I will take losses if it does push up there. I don't find myself changing that yet, but the big thing that's going to be happening here in later on this week is Theresa May is going to be announcing the budget for the Brexit debt, and it's been said that she may announce it at 10 billion or potentially 20 billion, and I don't know how the traders and the public is going to react to that budget. And I see that price is going in a range. What that tells me is traders are waiting for something to really drive that price, to really change the movement of where things are going. So you'll see that happening. That's why a trend happens, is because a currency pair is constantly, increasing in strength or pushing up, because there's no reason to change the direction. Now we'll get small pullbacks here and there, like I've mentioned to you before, and that's what I profit off of. But right now we're seeing a big push, and it has been since the 14th of September. And it's because we don't really have a reason to start selling the pound Canadian dollar yet. Now today's event with the FOMC caused a little bit of a push down for us, and it did on multiple pound pairs, especially the pound US dollar. As you can see here, this was the news candle, and so that pushed down. So I was hoping that the pound Canadian dollar would follow, and it has a bit, but it hasn't moved as much as I'd hoped, which still shows me that the majority of traders are still holding on to long positions and waiting likely for that announcement from Theresa May. What's going to happen when that announcement comes out? Well, it either could shoot up if people find that the debt funding to help with the debt is substantial enough. If they think it's a good amount to really cover that debt, then this could shoot up. All pound pairs could shoot up, and there could be a huge push increase in the pound value. And if they don't think it's enough, then this could drop, and it could drop in a massive way. I think that the potential for it of it dropping in pips, more pips than in climbing in pips, I think the drop could be substantially more. And that's just, a prediction, and who knows, it's not that valuable. But that's where I foresee the health of the pound, is that the majority is still waiting to see what happens. Now, that's a little bit dangerous for me, considering how many trades I'm in right now. And that if this shoots up really quickly, I could be looking at a very substantial loss on my buddy Robert's account. So what I'm doing is I'm waiting it out until that happens, and I'm trying to get updates on when that announcement may come out. And honestly, it's a little bit tricky because it may come out before I even see it. So what's going to happen is I'm going to take losses, and I'll start cutting trades out one at a time in this scenario. And if it jumps up in that way. And if it jumps up fast, there could be a slippage as well. So this is a very scary situation here. If things go against me. So that's why I'm hoping that the announcement today with FOMC will push this down enough for me to get out of this trade, or this basket of trades, before that announcement happens. Now let's say that it goes in my favor and things get pushed down heavily. Yes, I will probably have positive slippage. It could be negative if it does a bit of a whipsaw, and it's a little bit of a gamble. But that's what trading is about here. That I am in fairly deep in this basket, and I can have positive or negative slippage, and that's part of trading for me, and that happens to most traders, depending on what positions that they're in. This happened to be a positive slippage, and I could have negative slippage, and I'm very aware of that. So for those traders that maybe don't think I understand what could be in store for me, I'm very well aware of that. So that's my outlook on this. You understand the changes that I'm working on, the problems with the expert advisor that I'm in. Where are the best places to look for inside candle setups? New highs in the market after new highs are being met. It means that when a new high is made after breaking a certain level, for example, then we're in unknown territory, because if you look to the left at that point, there's not a lot of support resistance. You have to look way far back to see when the previous support or resistance points were, and where market might find support. But at this point, we're in unknown territory because it has broken the previous level, and that's why we're looking for the market to pull back, is because traders are more likely to pull back in the market when there is unknown territory, or a new high has been made, or a new whole number has been hit. So I'm just not looking at support resistance areas. I'm also taking in consideration what price is showing me. All right. So I think that's it for today. I did know that I was going to take a little bit longer. I know, I'm sorry about that. It's kind of a long video, but hopefully I will be a little bit shorter on the next one. It's been 10 days since I've done, or quite a few days since I've done a video. And wish me luck with this trade in managing. I have no reason yet to really close this out. If it does pull back substantially enough, and I get a hint of what's going to be happening with that budget announcement from Theresa May, then I may close out in the loss. Since I've already had a really good month on Robert's account, as you can see here, it has been a 10% over 10% month. I don't know why I keep showing you that account. But, oh my gosh, do I have two of the same accounts up? Is that what's happening here? Yes. I'm still very confused. Oh, that's lots. Right. Okay, there we go. So it says 8.57% this month so far. So that's $10,300, $900. And so that's really good. And so I look at taking a potential loss, whether it's 5,000 or 6,000, looking at the gap that was done as collateral. So the extra profit as potential collateral for taking a loss. And so that's very helpful, since these kind of losses that I'm taking here, or potentially taking here, are very rare. I think this is a good month to consider that. Depending on what I see. So try not to be emotional here. Really looking at the whole picture, fundamentally and technically speaking. And right now I'm going to continue to hold, but that may change at any moment. Alright guys, thanks for watching, and I'll see you next time.